Hello, everyone, and welcome to the Gibraltar Investment Group Stock Market Review and Forecast. I'm your host, Dr. BJ Love, and I'll be bringing you today's update for February 2nd, 2025. Here at Gibraltar, we use time-tested methods and indicators that helps us to navigate these markets with confidence, clarity, and calmness. Now, the major averages closed a volatile week that was mixed. The Dow Jones Industrial Average gained, but the S&P 500 and the Nasdaq snapped a two-week win streak. Stocks tumbled into the weekend in volatile trading. China, their AI company called DeepSeek, shook up the technology stocks on Monday, announcing that they had developed an AI model to compete with ChatGPT at a fraction of the development cost. Now, the White House said on Friday that it would implement tariffs on Mexico, Canada, and China over the weekend, leaving the major averages mixed for the week, as we forestated in our introduction. The U.S. dollar nudged up higher, while the flight to safety sent gold to a new record high on Thursday before finishing the week at $22,829 an ounce. The major averages closed out the week mixed, finished higher for the month, and investors are hoping that the January effect will mean higher prices during the year. Now, for the period, the Dow Jones Industrial Average gained 120 points and settled at 44,545. The S&P 500 lost 61 points and closed at 6,041. The Nasdaq dropped 327 points and finished at 19,627, while the small cap Russell 2000 gave up 20 points and settled at 2,288. Now, the VIX, the fear gauge, increased by 0.59 points and closed at 16.43. As we reiterate here on the channel, that as long as the VIX remains below the threshold of 20, the market tends to grind higher. And that is what we have been witnessing now for over a year. And we're going to look at it a little bit closer when we go to our long-term weekly charts of the indices. Crude oil prices rose 34 cents and closed at $73 a barrel. Gold prices again finished at $2,829 an ounce, while silver prices closed the week at around $32 an ounce. Now, Bitcoin closed the session at 101,670, and I believe that is lower from last week's closing session. All right, the market outlook. The technical condition of the market is mixed, but seems to be improving. Underlying breadth, the heartbeat of the market was mixed. Now let's get right into these charts and analyze what is really happening on the long-term basis. So we're here at our 4Grid, and this is where we monitor and analyze the S&P 500, the Dow Jones Industrial Average, the Nasdaq Composite, and the Russell 2000. So we're going to go ahead and just maximize this chart on the S&P 500, and we're going to see what it's doing. You know, like we said, as long as that VIX stays below 20, we just continue to grind higher and higher. Yeah, each one of these price bars represents 1 week, and as you can see, we go up, 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 then we'll come down. We go up, up, up for a while, and then we come down. We go up, 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 and then we come down. It touches this rising moving average. Now, this is our line in the sand, and this the theory that we have been practicing for years, almost 10 years now, that as long as the price stays above this rising moving average, you stay invested and don't panic when we have these short-term pullbacks. This yellow line represents the short term, so it may pull back to give you an early warning that something is changing. However, when you see this black line, a 40-week moving average, continue, to just go up and up and up and up, and that is what's been happening here since we first got our buy signal back in April of 2023. It has been a 2-year bull market And if you stayed the course, you should be very, very happy with your returns up to this point. Same thing now, we're going to go to the Dow Jones Industrial Average. We see we have that green background. Green background means we have a long-term uptrend. And as we remind everyone of our listeners here on the channel that long-term trends dominate, short-term trends fluctuate. So you can see the short-term, 2 or 3 weeks at a time, it'll fluctuate, it'll go down, it'll go down, it'll go down, it'll go down. But the main trend since April of 2023 for the Dow Jones Industrial Average. Here it is, our threshold, our line in the sand, our 40-week moving average continues to go up, 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 up. One time it came down and almost touched it, but it bounced and it's been going up for the last 3 weeks. So that is our basic fundamental theory here at Gibraltar. Long-term trends dominate, short-term trends fluctuate. So we follow the long-term trends and stay invested in the strongest sectors. And we're going to look at those in a moment once we finish our general top-down analysis here. Moving on now to the NASDAQ composite, which is tech heavy. As you can see, since April of 2023, we got our buy signal and it has been on a tear, even though we got a little bit of a scare. Oh, that rhymes. Tear, and then we have a little bit of a scare around October of 2023, but it bounced off that long-term rising moving average, right? Long-term trends dominate, short-term trends fluctuating. We can see perfect example here of these short-term trends. So it began to pull back, what we call a shallow pullback, because we did not get a personality change, as I call it. The background has been green. As long as the background is green, that is our proprietary software letting us know that it is okay to stay in the market. Buy the dips. Watch it rise. It'll fall. Buy the dips. And you will be able to profit handsomely from those dip moves. Now we're going to move on to the Russell 2000. This is the small caps, and as you can see, it is much more volatile. However, our background is still green, which means we are in a long-term uptrend, even though you had these super lows, and then they come up a little bit and have a breakout, and then we'll have a breakdown, and then we'll have a breakout, and then we'll have a breakdown, and have a breakout. So we had a pretty scary breakdown here in the week of 116. And it bounced off of that and started to move in the upward direction. So this is just our lesson here. Our fundamental long-term trends dominate, short-term trends fluctuate. So we're going to see what we are invested in right now during this continued bull market. Let's go to our what we call our triple screen chart. And we can look at Bitcoin. Look like Bitcoin is beginning to break down a bit here on the daily chart. And we'll just watch and see how that pans out going into next week. But we usually like to look at our weekly chart. And looks like Bitcoin have been showing a very good, strong uptrend momentum, flatten out a little bit here over the past 1, 2, 3, 4, 5, 6 weeks, and now it looks like it's starting to break down a bit. So we'll watch and see how Bitcoin will be performing over the next week. We also want to look at gold. We look at what is the ETF, which is the GLD. If you don't want to pay the $2,000 for spot gold, you can pay 1/10 the price and be invested in gold on this way. So it looks like gold broke out last week and it's continued its breakout. So we're going to look at the true gold, which is that 2,800 and change price that we recorded in the introduction. As you can see, for the past 3 weeks, it has been up, 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 and in demand. And now we're going to look at silver. We're going to look at the ETF silver. It's beginning to break out this week on above average volume. That's a good sign. We like our relative strength. And if you look at spot silver, which is around that $32 range, it is beginning to break out on a little bit more volume and looks like it's going to begin to follow suit with gold. However, I am watching the dollar. Our dollar is the DXY here, and it is starting to show some strength. Now, as the dollar strengthens, historically, the precious metals move in the opposite direction. So we're going to wait, watch, and see and observe what happens with the precious metals while the dollar is showing strength this week and looking like it may go higher, especially on our daily chart. We are seeing very good momentum as of this particular recording, because the dollar trades 24/7, and it looks like it's breaking out today. So we'll just observe how gold and silver, the precious metals, react to this dollar breaking out into higher prices. Okay, now with gold, there are other ways that you can invest in gold without directly investing in gold. We use the miners, right? Those companies that mine gold, that go out into the field and dig and retrieve gold and refine it. And these particular stocks are very, very strong right now, because as the price of gold goes up, their margins increase. So they're able to sell their gold for higher prices, their gold, silver, ore, and whatever it is that they um, refine. So one of the ones that we like, which is very strong, is a company. The symbol is KGC. KGC, as you can see, is breaking out. It's an $11 stock. We have a target of about 20, and it's looking a very good one to invest in, that we would recommend investing in right now. Another one is Harmony Gold, HMY, one of the gold miners, and you can see it's starting to break out. We love this type of pattern, and it looks like it's going into a golden cross. And as you can see, all of this volume here is increasing. That means that the big boys, the elephants, are starting to step in and invest into this company. This is an $11 stock, which could double if price of gold continues to rise. Another company we have is USAS. USAS. This is a penny stock, but it's looking strong. It has, when it broke out, it was at 47 cents. It is right now resting at around 50 cents. So, and looks like it can move higher. I love the relative strength here that I've seen, that is mean that it's outperformed the stocks in the S&P 500. Moving on to the next gold silver stock is NGD. As we can see, all of these stocks are breaking out on heavy volume. I'm going to try to get through these quickly, and then we can move on to what we own. IAG. Where else can you get, free information like this on very little known stocks that are breaking out, that are below $10, some of them, and really starting to shine? The last one I'm going to show here is AGI. For gold, breaking out here at around $20, is a little bit more. But as you can see, there is a pattern here, and these stocks are breaking out. Now, what we hold is ET. Bam, it's starting to move higher and higher. We hold an AI stock, AIO. Boom, it's resting a little bit, starting to move in the right direction. We like it because it broke out way back here in September of 16, when it was just $20, and now it's $25. So that's going to do it for now. Every day and every way we get better and better. Every day and every way we grow more prosperous, successful, and victorious. And God's love continues to surround us and fold us and wraps us. And we go